Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Dr. Winegarden, Senior Fellow in Business and Economics at the Pacific Research Institute, to discuss what options for the debt ceiling are available to congressional leaders on both sides of the aisle and the impact it could have to the economy. Dr. Winegarden, it is great to see you as always. Welcome back to Trade Talks.
Thanks so much for having me. Great to be here.
All right, you got it. Let's start with the very basics before we get into the options that congressional leaders have. Explain to us what the debt ceiling is and why it's such a contentious matter.
It's actually an odd little thing where put into statute, we have a limit of how much debt the government can take on. And, it made sense when you had a consensus that you don't run annual deficits. So for most of the country's history, it really didn't matter. But, for the last 60, 70 years, we run consistent deficits. And so we keep hitting this debt limit. And so as opposed to actually using it as a means to think we need to cut back spending, what Congress always does is it raises the debt limit so that we can continue to have debt. But from a statutory perspective, not a market perspective, but because of the laws, we actually have to raise this limit before we can actually on net issue more debt to the markets.
So what options are open to congressional leaders on both sides of the aisle? Because certainly over the past decade or so, it's been really hard to come to agreement on virtually all the issues that they're facing.
Right. To me, the bigger problem is that we're spending too much money. The amount of spending, amount of fiscal kind of stimulus, you want to think of in those terms, is just too excessive. And so to the extent that the debt limit has us have a conversation about what is an affordable level of government, how should that spending be allocated? That's very much to the good. But right now, and certainly in terms of the way the politicians bring it up, it is very much of a loggerhead issue where there's some symbolism on the Republican side saying, hey, we're going to use this as a means to have that affordability discussion. The Democrats, I think they look at this and say, every time this has been used as a means to control spending, the other side loses. So go ahead, you can bring this up all the time. And so it's being used very much as a political football. The problem is that there are real consequences if we were to actually get to a point where we can't take on more debt and we can't do any more of these games that the Treasury is doing right now to keep us under that limit. And that's the real concern.
Do you think because spending has, almost like an opium trip, if you will, I guess the real challenge is deciding where you're going to pull back from different areas where the spending has occurred. Not everyone's going to be happy all the time, right?
No, and we can't have childish policies anymore. We actually have a real issue of how much we're spending, how do we deal with it, and we need to have an adult conversation that is actually over many years. Given the size of the government and how kind of integrated it is into the broader economy, you can't just randomly start cutting hundreds of billions of dollars off. We need to do this in a very thoughtful manner where over time we're bringing the government down to something that is affordable, and that's the issue. And to the extent that we can use this debt limit as a means to explain to people what's happening, to raise these issues, to create political support for the idea that we need to rein back in the level of spending, that's fantastic. The problem is as we start to use this as political games, and the fact that it can actually lead to real damage.
Right. Well, I also think, one of the larger issues too, Dr. Winegarden, should we default on our debt, that could send, ripples through the global economy and just our position in the place, around the world.
Absolutely. And there's games they talk about the Democrats might print out $1 trillion coin and that gets deposited to allow us, and all of that creates risks and actually is going to increase the costs of that debt, which, by the way, is part of the problem, right? We're talking about $500-600 billion a year just to pay the interest costs. So putting that into perspective, we're getting our interest expenses close to how much we spend on defense. We're talking about serious money here. So, but all of those games, they increase the cost of borrowing for the government, and that's going to filter through the markets, raise costs for mortgages, raise costs for credit cards, for businesses. All of that is going to be very contractionary for the economy, very hard in terms of affordability. Families are already struggling. Inflation has really eaten away their purchasing power. This type of thing just adds to that. So this is very, very serious.
Yeah, well, we were actually, my producer and I were talking about the $1 trillion coin theory offline before you joined. And my first response was, well, we've seen this happen before where, high denomination currency was created by governments, and you know what happens with inflation when it comes to that. If we're struggling with it now, can you only imagine if we continue to pump liquidity into the system and just create money out of nowhere? If you think inflation's tricky now, I mean, it can only get worse.
Right. And it does make it harder for the central bank to control inflation, which, given their own actions and inflating the balance sheet, we already have enough of the difficulty of how do we manage inflation. We don't need any more difficulty. And we also, by the way, when we talk about these types of creative, there's actually a lot of creative things we can do to deal with the debt. The federal government has tremendous amount of assets on the book, and we undervalue those assets. I think like property is valued at $1 an acre or something ridiculous like that. Meanwhile, the government owns, hundreds of acres, if not thousands, of beachfront property in California. So we can use those assets to actually start paying down the debt, do a balance sheet kind of over time balance sheet transactions where we pay down debt and sell off assets. And mind you, that's pro-growth, because we're taking assets that have no economic value for all intents and purposes right now, and we're putting it out into the productive sector. So there's a lot that we can do, but we need to start having the right conversation, not the political gamesmanship over this debt limit. And it's a fake crisis.
Right. Well, and of course, at the end of the day, it's the constituents that suffer from it. When we see corporations sell off, non-performing assets all the time, it's not like it's a novel idea, to your point. So realistically, as we look out over the next couple of weeks, months, however long this process plays out, what do you think this scenario looks like?
I think we have a lot of history to guide us what's going to happen. This is not the first time we've had this issue. And what's going to happen is there's going to be a lot of political gamesmanship. There's going to be a lot of going back and forth. The Democrats are going to accuse the Republicans of steering the economy into into a ditch. The Republicans are going to scream that you're not serious about spending, and they'll go back and forth, and eventually the debt limit will get raised. And it's just a matter of who positions himself best to get some sort of minor concession from the other. And it's much more political gamesmanship, not necessarily meaningful reform. And I think that's the biggest loss, is that we could use this as an opportunity to have a very serious conversation. And, I guess that would be the thing to urge, but the history is not a good indicator that that's what's going to happen.
All right, Dr. Winegarden, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.